Hey everyone, ever stop to think about how the world of money really works? From your local bank branch all the way up to the global markets, it's this huge, tangled system. Well, today, we're going to untangle it, and we'll start with one simple question. So, let's just ask it straight up. Who actually controls the cash you have on you right now? I mean, sure, you earn it, you spend it, but the story behind its value, its power, and where it goes, well, that's part of a much, much bigger picture. So let's pull back the curtain and see what's really going on. And believe it or not, that whole story starts in a place we all know, our local bank. Yep, this is the foundation. It's the public face of this massive financial structure. So it makes sense to start right here. Now, we all kind of feel like we know what a bank is, right? But the official definition is really important. It's a place that takes in money for one main reason, to lend it out or invest it. And here's the absolute key part. That money has to be repayable on demand. That's the promise the whole system is built on. And this visual just lays it out perfectly. A bank is basically a channel. We, the public, deposit our savings, and the bank directs that money to borrowers, people who need it to start a business, buy a house, you name it. The bank is just the essential middleman that keeps the economic engine humming. So here's a crucial thing to get. Banks really have two kinds of jobs. First, you've got the primary functions, like taking our deposits and giving out loans. That's the absolute core of what they do. It's the engine. And then you have the secondary functions, things like safe deposit lockers or managing investments. Those are kind of like the optional extras built around that core. Okay, but if every single bank is just an instrument in a giant orchestra, then who's the conductor? Well, to figure that out, we need to zoom out and meet the boss of all the banks, the central bank. And there it is. In India, that conductor is the Reserve Bank of India, the RBI. Its main job is to control the entire supply of money in the country. And it does that using a powerful tool called monetary policy. This right here is where the real power is. What's super interesting is how the RBI's power is split. It has two different sets of tools in its toolkit. First, there are the quantitative instruments. These control the total amount, the sheer volume of money floating around in the economy. But then it has qualitative instruments. These are more about steering. They control the direction and the use of that money. So let's go ahead and open up that toolkit, shall we? Let's see exactly how the RBI manages the economy, and we'll start with those powerful quantitative tools that control just how much money is out there. All right, the first tools are the reserves. This is basically money that banks are forced to set aside and not touch. The cash reserve ratio, or CRR, is a chunk of a bank's deposits that it absolutely must keep with the RBI in cash. And get this, it earns zero interest. Then there's the statutory liquidity ratio, or SLR. That's another slice they have to keep with themselves, but in super safe stuff like gold or government bonds. So by just tweaking these percentages, the RBI directly controls how much money banks have left to lend to you and me. Next up are the interest rates you always hear about in the news, and this chart breaks it down for us. The big one to watch is the repo rate. That's the rate banks pay to borrow money from the RBI for short periods. The bank rate, that's for longer-term loans. Then you've got the reverse repo, which is the exact opposite. It's what the RBI pays banks to just park their extra cash. And finally, the MSF. Think of that as an emergency, overnight loan for a bank that's in a real jam. Now this might be the most direct tool of them all, open market operations. It's actually pretty simple. When the RBI wants more money in the economy, it buys government bonds from banks, which injects fresh cash into the system. And when it wants to slow things down, it sells those bonds, which basically sucks cash right out of the economy. It's like a giant tap for money. Okay, now for the other side of that toolkit, the qualitative tools. This stuff is less about hard numbers and more about, well, behavior. First, you have moral suasion, which is kind of the polite way. That's when the RBI just tries to persuade banks to do the right thing. But if that doesn't work, there's always direct action, the strict way. This is where the RBI can bring down the hammer with real penalties. It's your classic carrot and stick situation. So, we've covered our local banks and the big boss, the central bank. But that's not the whole story, not by a long shot. Let's zoom out one last time and see the other big players in this financial universe. So, let's talk about NBFCs, non-banking financial companies. Just like the name says, they offer financial services like loans and investments, but they aren't exactly full-on banks. The key difference you see here is that they can't do the basic stuff like give you a checkbook or a debit card. They usually focus on specific areas like car loans or microfinance for tiny businesses. And then we get to the big one, the capital market. This is where money for long-term projects gets raised and traded. And you really just need to know it has two parts. The primary market is for brand new stocks and bonds. Think of a company's IPO, its initial public offering. The secondary market, that's where all those old, already issued stocks get bought and sold between investors. That's your everyday stock market. All right. So we've looked at commercial banks, the RBI, NBFCs, and the capital market. We've met all the players. Now for the final step. Let's connect all these dots and see how this entire system works together. And this slide just brings it all home. See, right at the top, you've got the boss, the RBI, using all its tools to direct the commercial banks and the NBFCs. Those guys then work with the public, taking our deposits and giving out loans. And they also channel money into the capital market, which is what ultimately fuels growth for the entire country. It's one complete, connected ecosystem. So there you have it, the entire financial machine, from your own bank account all the way to the top. You've seen how all the pieces connect, which leads to one last question for you to think about. Now that you know how the system works, what's the one part you would change if you could?